Morning guys, Andy Demi here. Hope you're well, hope you're having a great day. Now, just wanted to shoot you a quick video to say hi and also to address something that comes up for a lot of traders. So, on Saturday I ran a session kind of breaking down, how I find my trades and then going into the market and analysing them. And some of the feedback from the students has been like, that's great. And now I kind of get how to do it. My problem is basically that I don't stick to it, I don't follow it, and I break my rules. And so that's what I want to speak about today. And it may be the same for you. Okay, so maybe you can analyze the markets, maybe you're at a good level where you can build the picture and understand probabilities and where the market's going to go. And if you are at that level, but you're not making money, then you need to fix something, okay? And a large part of that has got to do with your mindset. So, we want to kind of go into that and think about things and think, well, what is it about you that's stopping you from actually fulfilling your potential? Because one of the most difficult things is to get the skill to be able to make good predictions. And then it's about having the patience to wait for the price to go to you and being okay with missing some trades. And if you're able to do those things and combine them, then you've got a winning formula. And you can become, as wealthy as you want to be from trading. Okay, there's no limit. Okay, you don't need customers to make money from trading. It's not a traditional business. You can make money really just fulfilling on your own skill set. So really it comes down to, why are you breaking your rules? And in what circumstances? You need to start tracking them. Is it being impatient? And if it is, then you need to work on that. And you need to spend some time understanding why it's important to be patient. Okay, because there's a real fine line between success and failure. And sometimes it can just be that, waiting for the trades, being patient. Because when you start to see results, you'll start to think, well, hold on a minute, you'll start to associate your good habits with those results. Okay, and at the moment you may not be doing that. So sometimes we kind of think about trading in those one moments situations where we miss a trade and it feels like the worst thing in the world, okay? And equally, when we make a trade and it feels the best feeling in the world. But you've got to kind of look at the big picture and not worry about just simply that one-off situation. Because here's the thing, if you start thinking about the realism of it is that we're never going to be perfect, okay? We can't catch everything. Okay, just because you analyze the market and you predicted that the market may do something doesn't mean that you necessarily have to be in that trade. Okay, so part of the analysis, you have to also accept that probably out of all the analysis that you do, you may end up with maybe 10% of those trades actually being placed and executed. Because if you're really strict with your entries and you've got good probability on your side, you're going to make money. Now, here's the thing you want to think about. Do you want to be right and be losing money? Or do you want to be right and making money and being okay with missing some trades? I'm sure it's the second one. So, you've got to just kind of think of it and be realistic as to what's going to happen, so that one moment, you don't chase a market just because you predicted it was going to do something. Because if you're not getting in at the right entry, your reward to risk and your probabilities are skewed, which means you jumping in isn't going to win you the game in the long run. And it doesn't matter what happened in that one moment. Maybe you win on that next trade where you've just jumped in, okay? And I'm talking about not just jumping in randomly. Even if you've done your analysis and you said, well, look, I want to buy at this high point, and then the high point got hit and you weren't in front of your screen, you weren't organised, you didn't put an alert in, and you missed it, and the market starts to run away from you, and then you jump in and you think, well, no, I need to make some money from this because I got it right. No, you didn't, because you needed to be in at the price where it made sense. Because there's two things that you need to do to make money. One, you need to have probability on your side, and two, you need to get paid enough for the risk that you're taking. So as the price goes down, again, it's going in your favour, and you're not in the trade, your reward to risk, with the same stop, is getting smaller and smaller and smaller. So you may end up even having this an inverse R to R, okay, less than 1 to 1. So it doesn't make sense. Or what I see people doing is they put their stops tighter, which then again makes no sense, because it's not the setup that you played. So that's kind of what I wanted to say. I think you've got to kind of look at why you're missing trades, if you're missing them, or why you're not winning at your game. And is it because your understanding's not there? Is it because you're jumping in, you're not being patient enough? And most importantly, it's probably because you're not looking at it from a big point of view, the big picture. You're looking at it from that one moment. And if you can change that, you will change your result. Okay, guys? Wishing you the best of days. Good trading, guys. See you soon with another update. Take care. Bye-bye.